Greetings, everybody. Welcome, noon Eastern Time. Glad to have you here for a new program on Two-Way with our partners at Benzinga. Some of you be very familiar with Benzinga, some of you not. So one of the things we'll do today is get you to understand their unique place in the business of financial news. Joined today by two of the great reporters there, Katje, Tony Noto, experts on markets and other things. We'll talk about some of the business news of the day, economic news, and then eager to take your questions. If you're here on the Two-Way platform, would like to be in on the conversation, please go ahead and raise your hand. They can answer pretty much anything. So don't worry. Ask what you wish. Gentlemen, welcome in. Tony, I'd love for you to go first and explain to people the unique role Benzinga plays in terms of financial economic news.
Oh, that's a great question to tee off with. Benzinga, for as long as I've been with them, I started in 2020 when we were in just right getting started with the COVID pandemic. And before then they had an amazing origin story where they just basically started in a basement. And then from there, it just grew into this awesome financial website where you can track the latest news, the latest trends, the movers and shakers of the market, what's up, what's down, pre-market and aftermarket. We have a 24-hour team. We have reporters and editors on all corners of the globe. Retail traders flock to our website for the latest trends to see what's moving the market. We have our finger on the pulse of pretty much every aspect of all things stock market related. When I came in, I brought my M&A expertise. Before Benzinga, I had started at The Deal, which a lot of the older finance pros might remember. It's still around, thedeal.com. And from there, Mergers and Acquisitions Magazine. So I had that background. I brought that to Benzinga with a culminating sort of with a weekly column called the Deal Dispatch. And we also cover private equity and bankruptcy with our coverage. So both publicly traded and privately owned companies are on our watch list. And it's just been an amazing experience editing for them and writing for them.
Yeah.
I would say that we've even been ahead of the curve plenty of times, Chris, especially with these stock memes, these meme stocks that grab headlines. A lot of the traditional, I would say, legacy media kind of was thrown for a loop with these trends. But because of our team, including Chris, we came out with that coverage before everybody else, especially with the Roaring Kitty drama and whatnot. So Chris could speak more to that because I was editing his breaking news.
Chris, one of the things I love about it is it's of the moment. It's populist, it's accessible, it's transparent, it's timely. It gives consumers more in a more nimble way in terms of information and sensibility than a lot of traditional business and financial sites do. So what do you think is the appeal to your consumers on Benzinga that differentiates it from what else is in the marketplace?
Yeah, definitely. We tend to cater to the retail trader, the day traders, the swing traders, the people, who are looking for, as Tony said, what's next? What are the next trends? What are the next areas, where investors are going to flock? So we have tools, we have charts, we have all kinds of things accessible for traders. And then we also have our 24/7 content team, as Tony said, covering those breaking news stories. We also have our whims, which is why is it moving? So if you're looking at a stock and you just can't figure out, hey, why is this stock up 20%? Chances are we have a short story out telling you exactly why that stock is moving that particular day. We partner with many of the major brokerages where, if you're trying to trade your stock there, you may see our news or our whim right there on that quote page. So, really appealing to the active, everyday day trader, swing trader, and anyone else who, is first getting involved in the market, making that news accessible, easy to read, easy to consume.
All right, let's dig in and let's talk about the market, not an individual stock, but the overall market in a sea of mixed economic news. The story of the Dow and the S&P is quite extraordinary. Let's look at 101, please. So on X, Ryan Dietrich posts about how good numbers have been in September. 13 of the past 14 times the S&P 500 made a new high in September. It was then higher in Q4, 20 out of 22 times. So that suggests if history holds an augur. And then here's a headline from Benzinga 102, please. S&P enters historically strong fourth quarter, but October's volatility warning has investors nervous. So guys, the tariffs caused disruption in the markets initially, but now President Trump goes out and announces new tariffs and the markets yawn or go up. And there's a lot of uncertainty, Fed, et cetera. So I'll just throw it over to whichever one of you wants to answer first on this one. What accounts for not just stability, but gains in the market at a time of such economic volatility, particularly with the U.S. tariffs?
Yeah, you mentioned tariffs and, tariffs, inflation, unemployment. We've got this pending government shutdown, which we'll get to. All this headline news and potentially negative storylines, and the market just seems to be, ignoring the headline news, brushing that aside. We've got the S&P 500 hitting all-time highs over 25 times this year already. And in the month of September, hit a record for most new highs since 2017. So really just, the market has its eyes on the pulse and just ignoring that headline news. And that stat from Ryan, looks like we're in for a strong fourth quarter, if the trends continue. We do have, obviously the government shutdown, and then we do have a Supreme Court ruling on tariffs as a couple items to watch in the fourth quarter. But really, I mean, the markets seem resilient to all of that headline news 3 quarters into the year.
Tony, anything you want to add?
Yeah, I would say that the CFOs and CEOs that I've spoken to, they don't like uncertainty. So when it comes to their stock prices, a lot of them feel like they're valued just right. Some of them feel like they're undervalued, but that doesn't do much for their corporate finance initiatives. The S&P can go up all at once, but that doesn't necessarily mean that they're going to get deals done. The rate cut certainly helped, as we saw in September. Just the bond market just spiked. A lot of companies are now trying to get those initiatives that were originally mothballed due to the uncertainty of the tariffs and the trade drama. They're going to get those moving. But now with the government shutdown, that might reverse.
Yeah.
We're on this seesaw-like trend that is certainly going to dampen the mood. I mean, we need the SEC to give its blessing to potential IPOs.
Right.
I don't see how that's going to happen. So yeah, you can trade the stocks that are out there now, but what about the companies that want to go public now? The IPO market was just starting to feel good.
Right. All right. So let's talk about the shutdown. People are asking me all day, is there going to be one? How long will it last? And I say, if Donald Trump doesn't know, if Chuck Schumer doesn't know, I can't know. It's unknowable. And yet, historically, you tell me if I'm wrong, it's my recollection. On the eve of a shutdown, we see market volatility. We see nervous investors. We hadn't seen that. So once again, I ask this version of the same question, not unfazed by the tariffs. Chris, why are they unfazed by the potential of a government shutdown?
Recent trends show that during government shutdowns, the markets tend to go up.
Yeah.
The last government shutdown, 2018, 2019, the S&P 500 traded higher. It was volatile at first, but eventually I think investors just kind of, tend to ignore it and assume that eventually a deal will be reached and all will be well, and the market will go higher. So here we sit, near the deadline. The prediction markets are telling us, a 75% or higher chance of a government shutdown. Both sides kind of at a stalemate. So, we don't know for sure, but if a shutdown does happen, markets could be choppy for a little bit, but, I think eventually, all will be well.
Can you guys name an international event that you would have a high degree of confidence would cause a market decline?
I think a major war where the U.S. got more involved, we'd probably see a short-term decline or pullback, but it would depend on who it was with or how long it was expected to last. But
I would say a Martian invasion would be a market moving event. I mean,
that could be another one.
Russia incurred into a NATO country and the market's yawned. You know,
It's
it
like,
just,
what's gonna
yeah,
get people to shake?
yeah,
The bank failures in 2023, if I remember correctly,
yeah,
that didn't do well for
yeah,
the market. That didn't bode well for the market. And then you
yeah.
saw like that steady decline. But when Silicon Valley tanked, I remember the checking Benzinga, and it was just a new story, at a rapid clip. It was
Yeah.
just amazing.
Yep. All right, let's talk about some individual markets. EVs. I'm fascinated by China's dominance here, and I think if the West and the U.S. could turn back the clock, China is just they like 8 different companies that make tons of EVs, really low price point. Uh, and the U.S. has got Tesla, and it's got the big auto companies trying to figure it out. So, just either one of you again, where's the U.S. Where's the U.S. market from the consumer side, and where is it from the production side?
Yeah, again, here we sit at deadline day for the EV tax credit, right? Right now, US consumers can get $7,500 off of new EVs, and that is helping to kind of keep away some of that Chinese competition. As soon as we end that $7,500, if you're a consumer looking at price, those Chinese EV companies are a lot cheaper here in the US and also in other markets. So, I fully expect these third quarter numbers for Tesla and some of these other EV makers to be really strong as consumers are kind of rushing out to buy new vehicles and take advantage of that, 7,500 tax credit before it expires. But the big question is what happens in the fourth quarter? What happens in Q1, right? When it's a level playing field for all these EV automakers. So as you said, China, we've got BYD and some of these other companies really taking market share from Tesla in Europe, in Asia, and some of these other markets. And Tesla obviously has dominated the US market for a while. GM and Ford have kind of pulled back on their plans to go all in on EVs, but I think these Chinese companies, if they can offset any tariff concerns or pricing wars, that they make their cars cheaper. And as that credit expires, I think they're going to look real attractive to consumers.
Could you guys forecast, is it possible that based on regulation and market that the Chinese could dominate production sales in the US? Is that something that could ever happen?
I
I
think it's
think so.
possible, but I think we will see some potential, tariffs or ways to prevent some of those companies from coming here and dominating. So, I could see some walls being put up in terms of, just letting them come in and disrupt completely. But maybe some partnerships, some joint ventures in the US. That's what GM and others had to do in China at first was those joint ventures.
Right.
Maybe that's the way that the US is approached as well.
How much does a Tesla cost?
I think a Tesla's 44 or 45,000.
Yeah.
Too
So is
much
there
for
any is there
me.
any is there any thought of Tesla or the others that have, as you said, pulled back? Is there any thought of trying to compete on price and produce a more affordable U.S. manufactured for the domestic market and for export? Is that something they're considering?
Yeah, Tesla for a while was one of their focuses. They've kind of pulled back on that to really work on these robo taxis and autonomous vehicles. So I think that's further down the road, but we do have Ford and GM both trying to do their own platforms to make the vehicle cheaper. Rather than, that manufacturing process. So I think that is the goal is really to get closer to that 30,000 price point to really be attractive.
Of all the things, of all the markets and dynamics of U.S. China economic competition, I continue to think this is one of the most undercovered ones. The Chinese dominating not the U.S. market and not just their own market, but Europe, Israel, all over the place. You go there, there are a handful of Teslas maybe, but there's just unfathomable number of Chinese manufactured EVs. Let's talk about M&As. You mentioned them earlier. A lot of times the media, what do you call them? What do the British call them? Tie-ups. They call them
Tie-ups, yeah.
tie-ups. It's a great headline word. Tie-ups. It's a nice
Tie-ups.
short word. The media ones get a lot of attention because the media likes the media and they're sexy stories. They involve celebrities. But the industrial ones often involve companies I've never heard of are obviously super important and major. So first question is, what's the outlook for M&As in the balance of the year? We're in the time of year pre-Thanksgiving when you often see deals consummated. So what's the outlook for U.S. M&As right now?
I would say that it's a trend that I've seen before. I've been covering M&A since 2008. And we've sort of seen this trend before, which where is more is being spent on fewer deals. I think that if you are a CEO, you're going to want to spend money on the right deal, not necessarily roll the dice on a deal that might not work out. And data shows that most M&A actually doesn't work out in hindsight. And they can't risk. I think it's a low risk type of mood now. And while dollars are up, they're spending more, but they want to pinpoint the right deal. Global M&A, it's up 32% over the first 3 quarters. USA up 22%. PE-backed M&A is up 16.5%. This is all better than last year, but again, fewer deals with little to no risk-taking going on.
What specific either markets or companies would you point people to that could be significant?
Well, to go back to the EV aspect of this, a lot of analysts and bankers, they've been talking about the mandates that come across their desk, EV adjacent deals like charging stations or companies that manage EV charging. There's some consolidation that's going on in Europe. I can totally see a lot of cross-border M&A happening in that respect. Companies that are based in Austria and Germany, the Netherlands, they're going to want to do those deals here. If you make nice with the Trump administration, you might be able to, offset that tariff, that levy, by doing business with a company here. So there's all sorts of plays that they can start up. I would say that it's interesting to see companies that are not doing deals because debt is cheaper now. That's a relatively new development. We saw AT&T do their bond deal. I don't know if M&A is on the docket for them. I would say that it's interesting that these big tech companies aren't doing deals. They're sort of letting the uncertainty of the market hold them back a little bit. I think Microsoft has sort of sat on its hands for, I think, 18 months now in terms of doing a deal. I know that they just had a win in court against the FTC regarding their Blizzard Activision deal, but I don't know. I'm curious to see what big blockbuster deals are on the horizon.
The conventional wisdom and history suggests Republicans are more inclined to approve deals, and this administration in particular prides itself on being low reg, and yet there's a side issue of the impression, well earned, that if you give money to Donald Trump's causes or do other things that Donald Trump likes, you're more likely to get regulatory approval. What does the business world think of the prospect of getting deals approved? In other words, would these be what we've seen historically, particularly under Democratic presidents, long evaluation process, long regulatory review, often ending with a refusal? Or do people think if they go for a deal, they're more likely to get fast approval with the relatively truncated process?
I kind of
Yeah, go ahead,
I think we get some deals done in the tech space and software now. We had the Google antitrust case, as Tony mentioned. We had a Microsoft one as well. So some of those big tech, the Mag 7, companies were probably a little hesitant, with some of those pending legislation. And as you mentioned, Mark, this admin is, a lot more friendly to approving deals as we've seen, early on. So I think M&A starts to pick up, especially tech and software. And, I think we'll start to see some big deals announced here, hopefully soon.
Okay. Let's talk about interest rates. We got a couple more Fed meetings. Because of the potential shutdown, we're going to be missing some data that the Fed would have relied on. But the conventional wisdom, I think, continues to be we're going to see 2 more rate cuts. And that's kind of priced into the stock, if you'll pardon the joke. Here's headline 109, please, from Benzinga. why Jackson Hole is the Fed's mountaintop moment and why it matters more than ever. Anthony's story. Where are we now in terms of both what the expectation of what the Fed will do the rest of the year under challenging circumstances? They don't want stagflation, but there's signs that maybe a rate cut's not the smartest thing. Or is it sort of baked in now that there'll be two more rate cuts? And how will both the markets and the real economy react to that?
Well, cheaper debt is always what gets them excited. To the extent that they can, like I said, get these initiatives that they had mothballed for months off the ground. So if if the Fed is going to make two more moves, you can expect a lot more confidence in terms of companies pulling something like what Thermo Fisher did today, selling $2 billion worth of bonds. I think in one day there was something like September 18th, which was like right after the Fed met. Bond deals just spiked tremendously. So if you're looking for activity for the market, at least to get more interesting in that respect, yeah, two rate cuts. I mean, expect to see JP Morgan, Goldman Sachs, Mizuho, they're going to be managing a hell of a lot more bond sales for sure.
Yeah. All right. I'm going to ask you guys about four individual things for individual companies, interesting companies, and then we'll take your questions. So if you're here on the two-way platform, want to get a question on anything we've talked about or anything related to the economy or individual markets or companies, please raise your hand. We'll get to your questions in just a minute. Go put up 110. TikTok, incredibly interesting story involving government and security and a massive business, not necessarily fully monetized at the level given how many people are on it. Here's the headline again, another story from Tony. TikTok drama isn't just about security. It's about control too, what to know. So Tony, where do we stand on TikTok? The president announced a plan, sort of, but with still a lot of details not known. Where do we stand from all those perspectives, from a security perspective, from a consumer perspective? Where do you think we're headed?
Well, the thing I never understood about the TikTok narrative, I should say, is there were there the there were a good amount of American investors that owned this thing or do own this thing still. So I never quite understood the logic of, hey, we have to get it to be US owned. It is very much a US owned
Isn't the issue isn't it more operated than owned? In other words, they want the security of the Chinese not be able to use the algorithm and the choices to whether it's for
right.
propaganda or data. So it's less about ownership, isn't it less about ownership and more about operation?
Right. It's about ownership and control over this algorithm that just is so innovative that has people, I guess, paying off their college tuition with the videos that they can have go viral. It shook everything, especially in the lead up to the 2024 election. It got to a pivotal moment just recently, this month. Trump and Xi Jinping, they didn't hash out a deal just yet, but what they have done is they've sort of looked at the amount of people in this country, which is very few, of deep-pocketed individuals who want a piece of this thing. And it's an interesting narrative. When you look at it beyond security, is it really about us having oversight over our own viewers rather than a foreign entity? So I always thought it was more about that. I mean, there's really a lot to want here. I would say that the fact that Larry Ellison is in the conversation speaks volumes to why this deal is interesting, why this is a hot asset for a company like Oracle to have a piece of.
Yep. Okay, let's talk about Ben and Jerry's. Another headline from Benzinga 111. One of the co-founders, was it Ben or Jerry who resigned? I don't know. Ben and Jerry's co-founder resigns in protest as politics
Oh, it
continue
was
to
Jerry.
influence Jerry. I always kind of mix up Ben and Jerry and Tom and Jerry. That's my fault. Um, and this is part of a broader thing in the era of Trump 2.0. A lot of corporations that, based on board pressure or employee pressure or the predilections of CEOs, had been pretty woke, and you've seen it's a massive story, a trend away from that. DA policies being eliminated, less concern about some of these things. So why did Jerry resign, and what is the meaning of it?
Well, Jerry resigned. It was outlined. He didn't mince words
Yeah,
on Twitter. He thought the company wasn't getting political enough. It's owned by Unilever. Uh, I can understand Unilever's hesitation in getting too political, but that was part of Ben and Jerry's recipe since
yeah,
it was launched. You know, from the flavors of ice cream that they have, to I believe all these initiatives that they had going on over the years. Um, Jerry Greenfield, he kind of flipped the script in a way. It wasn't a personal controversy, like say, I don't know, for example, Papa John's, right? It was, he really wanted to be a part of this, of the current dialogue of social issues, and they've done it since they've been around, whether it was with racial justice, climate change, and so a campaign like Save Our Swirl was a big one, and it's different. It's definitely a 21st century thing.
yeah.
In the 20th century, you didn't really see much of this. Um, so I thought it would be interesting to write a piece that sort of looks at some of the big name CEOs of the past and whether or not they were forced out just because of infighting, or because there was a power struggle, or perhaps they just aged out of the role, and or they stayed in office
Right.
right until they died. This it's kind of a musical chairs now, and I think the current trend is that the CFOs are switching positions pretty rapidly
Yeah.
nowadays.
Let's go back, talk about the shutdown in the markets, and then we'll take your questions. So if you're here on the platform, you want to ask a question, please raise your hand. Um, if we saw a shutdown of, a week, 2 weeks, do you guys think the markets would then start to react badly? Because of course that could be a forcing mechanism to get the politicians to come together. So we talked earlier about the fact that pre-shutdown, not a problem, and you said it's right. Historically, we've seen markets do fine during a shutdown. But is there some point that would be a break point, and to the extent you could describe what that would look like? What would that look like?
Yeah, I don't know if the overall market, I think a week, 2 weeks, we start to see sectors get hit, right? Like airlines is one traditionally, does poorly during a government shutdown. They can still operate. You still have your TSA agents, but you can't hire and train, new federal workers. So it can back things up. It can impact travel. Tony mentioned IPOs, right? So some of the regulation, some of those new market issues, so, some individual sectors, I think could get hit, but, I really think at this point the market's probably baked in at least a week shutdown. Mark, you said 2 weeks. I think, we get past 2 weeks, then, maybe we're there, but otherwise I think just your individual sectors at this point.
Got it. I got a few more topics, but I want to start taking questions. So again, raise your hand if you want to get in the conversation. John, welcome in. Tell folks where you are, what's on your mind for Chris and for Tony. John, you're unmuted, but I don't know that I can hear you. Try one more time. Yeah, try to unmute. Yeah, you maybe take off your headset because for some reason we're not hearing you. Give you one more second there. Unplug that piece of hardware, probably made in China. John, try one more time. Nope, cannot hear you. Apologize. Keep working on it. I'll ask you guys about Bad Bunny while John works on it. You're unmuted, John. It's just that's not the issue. It's something with your mic there. Why is they going with a controversial halftime performer? Here's the Benzinga headline: Bad Bunny named Super Bowl halftime performer. Could Comcast set a new viewership record? Extremely popular, extremely controversial. So that's the trade-off. Why is it in Comcast's interest? Does it make I guess the question is, does it make them more money if they have, since the ads are all pre-sold? Does it make them more money to have big viewership because they've already made the money off the ads? Why do they care?
Yeah, I mean, Comcast has sold out, all the pre-ad inventory. Typically, some is left over, left for those last minute deals. I think they're going to be able to get more than 8 million for those, last minute ad slots. And, companies like setting records. It helps you appeal to advertisers later on. They've got the Winter Olympics and the Super Bowl in Q1. They were able to package some of those ads together. But I mean, last year they set a record for viewership during the game and also halftime. And, American football, the Super Bowl, it's primarily American sport, but it's getting more global. And Bad Bunny is a global artist. So he brings some controversy, but he also could bring a huge international audience to Comcast, which they hope can translate into, return viewership and also subscribers to Peacock, their streaming platform. So even if the ad side, doesn't get a bigger boost from announcing him, perhaps the later on, streaming and ad revenue can.
Got it. John, you want to try now?
Sure. Can you hear me, Mark?
Yeah, yes, sir. Thank you for being part of this. Tell folks where you are and what's on your mind for Chris and for Tony.
Sure. Thanks so much. I'm in Jacksonville, Florida, and I just got to say I appreciate this platform so much. Thanks for all the work that you and your whole team is doing.
Thank you, John.
The question I have is, most of my life, all of my life, private investments, private equity and private credit have been available only to accredited investors. And a lot of those are institutional investors, such as pension plans and endowments. And I really question the opening those investments up to qualified money accounts like IRAs and 401ks that one of Trump's recent executive orders did. And I'm questioning whether or not the American public really understand the complexity of those, the opacity of those investments, and what is the utility of allowing that qualified money into those sophisticated investments. All of a sudden now, has the American public become more sophisticated in their investment approaches? And do you have any feedback on that, gentlemen?
Gentlemen, good question. John, thank you.
Yeah, John, I mean, that's a great question. I think your everyday investor, wants access to more companies, especially your SpaceX, your XAI, your OpenAI. But when you ask, have investors become smarter? I don't know if that's the answer. I think they definitely have more tools available and more ways to access different things. It'll be interesting to see how valuations go up with some of these private companies. I mean, it's a great question. And, I think a SpaceX and XAI, people may be able to value based on other companies. But once we get into some of these more, speculative companies that haven't been around as long, I think we do risk, the element of losing capital in some of those retirement accounts and investments. And I hope that, investors and whatever platforms they use are able to, convey that and make sure the risks are outlined to everyone, before those investments.
John, thank you. Let's tip into President's. Go ahead, John. Go ahead.
Do you think that it might be a utility the other way, allowing those investments access to the liquidity that several tens of trillions of dollars would provide it? It's something that if those investments get marked to market much lower than investment committees have been led to believe, then a lot of pension plans and endowments could be in trouble. And if they don't have access to that liquidity, it could be a real problem for the government. That's kind of the vector that I'm looking at it from, the point of view I'm looking at it from.
Gentlemen.
Tony, you want to chime in or?
I don't know, this might be a little out of my wheelhouse, but I would love to follow up on that, and maybe perhaps weave something into our next coverage, my next column. It's definitely interesting.
I'd appreciate that.
Yeah, I have to, it's a little bit above my pay grade at the moment.
John,
Mine too.
John, thank you.
Have no pay grade.
Thank you. Let's dip in. The president's talking about a deal with Pfizer right now in the Oval Office with Dr. Oz and Secretary Kennedy. So let's listen to that and get your guys' reaction to what he's talking about.
And the problem is with many of these things, and in this case it's going to be pretty quick, but oftentimes you'll do something medically because of the process, and it won't be seen for 2 or 3 years. That happened also with, I could say 4 different things, but just if you talk about insulin, so it was 200, 300, 500, and you couldn't get it, and I got it down to 35. And I said, I hope I win the next election, because otherwise whoever wins is going to take credit for it. Well, what happened is we did win the election. We did great. But unfortunately, it didn't work out that way from a practical standpoint. And Biden, when I saw him get up and take credit for the $35 and even less insulin, that was 1,000% lower than what it was just previous. Boy, I tell you, I didn't like it. I didn't like it. So I did the best I could to let him know we did it, because we want to be given credit. But we are the ones that got insulin down to that number. And you're right, they tried to take credit for it. They had nothing to do. In fact, they didn't even know what happened. All of a sudden, the insulin price kicked in at $35. And they asked Biden about it. He had no idea what the hell they were talking about. But after they explained, and they didn't really explain to him because he was not capable really of understanding it. But when they went out and talked about it, they acted like it was a great feat by Biden. It had nothing to do with him. And it continues, and we'll get it down even further. But insulin was, people weren't taking it, I would imagine. They couldn't take it. God bless you, Bobby. I hope I didn't catch COVID just there.
Okay, we dump out of this. Gentlemen, on drug prices, the president has long talked about not being laissez-faire, but intervening in the market. U.S. drug companies make an enormous amount of money, and they charge an enormous amount of money. So what's your general view of how this administration is postured towards the drug companies, and how it will affect their stock prices?
Well, the big aspect of that announcement, rather than the drama that he seems to love to bring up and not give the previous administration credit where it's due, is the fact that they want to avoid tariffs as much as possible. So with Pfizer, a big part of this deal is a grace period. They don't want pharma-specific tariffs. That interferes with drug development. That interferes with people getting the care that they want or the medicines that they need. And this administration has already gotten a lot of bad press about that already. So that's the big takeaway of this Pfizer announcement. I mean, I don't know the specifics of what he was referring to with insulin, but it's all of Pfizer's catalog that has that company worried.
Yeah.
And tariffs were definitely something that they were trying to avoid, just like every company was trying to avoid. I mean, whether it was automotive or any sort of manufacturer, commodity company, drug companies were worried.
Yeah. Here's to Dr. Makari, who heads the FDA. Here's what he said a little bit earlier at the announcement. Quote, "Today marks the beginning of the end of the great American ripoff. And it also marks the beginning of the end of a great American tragedy, something I've seen as a physician at the bedside, patients getting spun up into a financial rage to try to get enough money to pay for a drug that's 5 or 10 times more expensive than the same drug in France or Germany or the UK." Do you guys, basic economics here and oddity, why are these drugs often made by American companies, even if they're manufactured elsewhere, why are they so much more expensive in the US?
I think if you follow the Mark Cuban train of thought and what he's done with his drug company is get rid of the middleman, right? We have these companies that control, health insurance and whether or not they cover a drug. They also control the pricing of the drugs. Like that probably shouldn't be the same case for companies, right? To be able to control pricing and the insurance on it. So I think, getting rid of the middleman, right? And some of these other countries don't have that same system in play. So I think that's part of the reason why drugs are so much more expensive here is you got to feed everyone down the chain of the companies involved, and the consumer in the end is the one who then suffers.
Great. Okay, let's bring in a couple more. Michael Granoff, who's taught me pretty much everything I know about the EV market, including the secret Chinese plan to take over the world. Michael from Tel Aviv, welcome in. Thank you for joining. Question or comment for Chris and Tony?
Well, I tuned in just recently. I heard you talking about the pharmaceutical industry. Not an area that I know a lot about, but what Mark was referring to there is that I've since 2009 actually been following China's automotive strategy, which I think has succeeded far beyond their wildest expectations, not only in becoming a dominant global force. And in America, it's a bit of an anomaly just because cars are not on the road. And even though it's written about a lot, people tend not to perceive just in how enormous it is. But here in Israel, we're only 4 years into having Chinese EVs. They now represent almost half the new car market. And we're seeing that in other markets in Latin America, in parts of Europe, and other parts of the Middle East. And, I can go back and talk about the history of this. And I think there was a huge missed opportunity at the beginning of the Obama administration, the GM bankruptcy. But to look forward, what are your thoughts about the future of global automotive and what the Americans can do to compete? Because, Ford CEO Jim Farley has, recently talked about just how challenging it is, and they're trying some pretty dramatic stuff to try to catch up. But it's a big, heavy lift.
Gentlemen.
Yeah, I mean, I think you mentioned Farley. I've watched Farley talk a couple times. Also, RJ Scaringe, the CEO and founder of Rivian. That $30,000 price point. I mean, I keep coming back to that. It's the same thing, Tesla talked about for years. I think, I don't own an EV. I think for EVs to really get that adoption here in the US, I think the price point needs to come down. It needs to get closer to the $30,000 level. Whether that's Tesla or another company, or it's, a foreign automaker, a Chinese company that comes in and says, hey, we have these cars that we can sell for, 20,000 USD. I think that's what gets, the adoption rates up. I write about EVs and you mentioned, Michael, some of these other markets that amazes me, right? Norway, Sweden, Finland, where EV adoption is like over 80%. And it's great to hear, about Israel as well. And I think, a lot of that has to do with the different options and the prices available to consumers, and also, the government and the level of caring from the consumers as well.
Yeah, I would agree. I drove a Rivian recently, and it's an amazing car. It was awesome. I zipped around Brooklyn with it. And I'll likely not own one for a while because it's just way too expensive. And it's a shame. I think that I brought up earlier, Michael, I don't know if you were listening, that a lot of EV adjacent companies are looking to do deals, and there's going to be a lot of consolidation in the space, particularly overseas. So we can anticipate foreign companies probably trying to ink some deals here to see if they can get a handle on infrastructure. I think infrastructure is the big thing. We took a huge step back when it came to, or maybe just didn't take enough steps further in previous administrations to ensure that if you have an EV, how do you get from point A to point B? I rent cars pretty often, and it's always always worries people whether or not they should get an EV because they don't know if they'll make it to, their parents' house or across state lines. So there's a lot of uncertainty in that space, and then also how fast can cars charge. hybrid. Everybody I talk to in the space on the consumer side feels safer with hybrids here, but I don't think that's the case overseas. I think that, like Chris said, the adoption of EVs is just that they bested us on that.
Michael, thank you. Grateful to you. Okay. Next question. Ray Marcano. Ray, welcome in. Ray lives in Ohio and is a great journalist and columnist. Ray, question or comment for Chris and for Tony?
Yes. Excuse me, on the Bad Bunny thing, which I think is just a complete bunch of nonsense when it comes to the controversy, but focusing on the economics of this. Latinos now make up 1 out of every 5 people in the United States. They are the fastest growing viewership category for NFL games. The NFL is actually reaching out more to Latinos with its, I think it's the Por la Cultura marketing campaign. Isn't this just a no-brainer for the NFL and Comcast? You want to try to attract these viewers, don't you? You want to try to attract this money because it's so fast growing.
Yeah. Guys.
Yeah, I think absolutely. I wasn't surprised to hear them book Bad Bunny or, an international artist. The rocker in me was a little disappointed we didn't get, a rock group for many years in a row here, but money talks, and Bad Bunny, he was like the number 3 most streamed artist on Spotify globally last year. And as you mentioned, that Latino population for viewership is growing. We're seeing more NFL games being played overseas or in South America. We had the game in Brazil earlier. We have games in Mexico. I think it's great, and I think NFL, like I said, it was an American sport for a long time, and they really want to boost themselves internationally. And now that you have games on Netflix, on Amazon, you've got a more global audience for some of these games, and I think Comcast could really benefit. With a larger international viewership and, selling some of those ads to international markets as well.
Also, what did it do? It just got us talking about it. I mean,
There you go.
They booked it for relevancy. No one's going to be going out and throwing the football around during halftime because they want to stick around and see what Bad Bunny's going to do.
And what he's going to say, because controversial act can bring in viewers for that as well.
Chris, I think I can tell you exactly when the Super Bowl halftime show will next feature a rocker. It will be when monkeys fly out of my butt.
Exactly. It won't happen again. So they said, hey, Super Bowl in San Francisco, maybe we'll have like Metallica or someone from the Bay Area, but nope.
Yeah, no, not gonna.
Whoever's in Vegas, Ray, killers.
Ray, did you have something else, or that you're all good?
No, I'm all good. Thank you very much.
Thank you, Ray. All right, gentlemen, let's do a little Benzinga 101. If people want to access your profile, your content rather, where do they get it? Social media, internet, YouTube, where can they see your content and your colleagues' content?
Yeah, that's a great question. Benzinga.com has all our articles there. Easy to read, easy to find. We also are on all major social platforms. On Twitter/X, it's at Benzinga. It's a great place to see, stories shared throughout the day and different financial content. And I'm there on there as well. And on YouTube, we do have several programs throughout the day. We have a market trading show in the morning, really geared towards, those day traders, swing traders. A lot of sharing of charts and different movers, and, some other programs as well. So lots of places to consume our content.
Yeah, and even on Instagram too at Benzinga. I mean, just a shout out to our social media team. Jacob Shipley leads a pretty tight ship and does wonderful content for us. So if you're subscribing, you're in for a treat with some of our videos that are building on the narratives that we start in our copy that gets translated to quick, easy bites for video content. So
let's talk about your business as a business. What's the business model for your company?
For us, we have a lot of our readers are brokerages, the top bankers, advisors. I've spoken to legal advisors that work on M&A deals that love our publication. Retail traders, a part of our legacy is giving people that scoop that they wouldn't get in a traditional legacy media platform. So, and we have a very interactive app for folks to download and check the latest goings on and the latest movements in the market. I would say anybody who's investing in whatever product, there's a spot for you on benzinga.com, whether it's ETF trends. What else, Chris? I would say financial planning is huge for us. Cryptocurrency, we have digital asset events coming up focused on digital assets and cryptocurrency. And those are typically, I mean, now we sort of saw this huge uptick in coverage on cryptocurrency, but we were among the first. So I think that's sort of a badge of honor for us. So yeah, Chris, if you have anything to add, if I'm missing anything.
Yeah, no, I mean that sums it up. You know, we have our content, we have licensing, and we have events, as Tony mentioned, our fintech and crypto event in New York City in November. You know, a great place to kind of showcase the growing world of fintech, some of those private and public companies, and then also cryptocurrency and digital assets, which is, you know, one of the fastest growing sectors as well.
You want to come, Mark? You want to come to our New York event?
I might come. Please invite me. So grateful to you all. Looking forward to collaborating with you. This is a company that has found a vital voice in an area of coverage that, of course, people are interested as consumers, but also as investors. And there's nothing quite like it in the market. I used to work at Bloomberg. I'm very familiar with that product. You know, Reuters, et cetera. There's all sorts, but Benzinga is a unique product, and it's about its voice, about its timeliness, about its emphasis. And so if you haven't checked it out, I recommend. Again, the website's probably the best place to start, benzinga.com, but it is a unique product in an area that, of course, so many people are interested in. Gentlemen, grateful to you for joining. Thank you.
Thank you, Mark.
Okay. Let me just tell you again about some of the shows we've got coming up today on Two Way. 6 o'clock Eastern Time, Mark Bednar, Republican strategist, and Rachel Bade, a journalist who covers shutdowns like no one else, will join me at 6 Eastern Time with all the latest on what's going on. The shutdown will just be a few hours away, the deadline at that point, with no end in sight. Bob Woodson will be Michael Moynihan's guest in the Moynihan Report at 7 Eastern Time. Moments ago, I concluded an interview with Mark Andreessen, the great investor. Andreessen name synonymous with Silicon Valley and with investment in billion-dollar companies. A lot of our talk is about AI. And if you haven't started to use it, or you've barely started to use it for your business in your own life, Mark walks through how to do it and what it means and why it's so important, particularly like we talked about if you own a bakery, how you can use AI. And Mark had ingenious ideas. So that'll drop in a few hours on Next Up on the Megyn Kelly Network, on YouTube as a podcast. I recommend it to you. Great conversation. And my reported monologue is on the antecedents of some of the current controversies of the day, and a reminder that history did not begin with Donald Trump, although it just seems like it did. And then finally, don't forget, you've got till midnight tonight, same deadline as the shutdown, to submit questions for Meghan McCain's conversation with Mike Pence. Send an email to citizenmccain@twoway.com for whatever you'd like to suggest Meghan ask Mike Pence. I got to submit some questions too. I recommend it. It's a liberating feeling. Again, go to email to citizenmccain@twoway.com with your suggested questions. The interview airs tomorrow at noon Eastern Time here on Two Way. Thanks again to Chris and to Tony and to all their colleagues at Benzinga. Thanks to you all for tuning in, and I will see you at 6 Eastern Time for Two Way tonight. Have a great day.